Hello everyone out there. How are you all doing? I'm Kate Hill and I am here, as always, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. Stay tuned today for all your latest property news. The latest interest rate rise has done very little to dampen enthusiasm in the property market, with CoreLogic figures showing auction clearance rates are actually on the rise. Nationally, the clearance rate has hit 75% at the weekend, the highest level since February 2022. There were 1,750 properties taken to auction across all the capital cities, compared with 1,739 the previous week. Melbourne performed really well with a clearance rate of 76%, which was the fourth consecutive week it achieved a clearance rate above 70%, and its best result since October 21. Adelaide was the best performer in the smaller capital cities with a clearance rate of 72%, followed by Brisbane at 68%, Canberra at 66%. In Perth, 2 of the 6 results reported sold under the hammer. While clearance rates are rising, so too are property prices, according to Domain. It says that the combined capital city values are up 1.8% in the past quarter, with Sydney leading the charge with a 3.4% increase. Moving forward, the most recent rate rise is not expected to affect Australian house prices. CoreLogic research says that other factors will keep them steady. The lift in interest rates could act to dampen some of the recent housing exuberance, although a range of other factors are likely to support the continued stabilisation in home values, including low available supply, extremely tight rental conditions, and higher demand via net overseas migration. Many economists have now flipped their predictions of price drops this year to predict price rises. I spoke about this a little bit last week. Although Morgan Stanley analysts expect further drops this year as a result of high interest rates and weaker employment conditions. The NAB Bank's chief executive says that prices have bottomed. I think you're seeing more and more prices going sideways as opposed to down, he says. New housing approvals have fallen to their lowest levels in more than 2 years. The Australian Bureau of Statistics figures show dwelling approvals dropped by 15% in the 12 months to March, the weakest yearly result since October 2020. BIS Oxford Economics senior economist says that soaring costs, lower borrowing capacity, and growing cost of living pressures means that many are unwilling to commit to a brand new home. The start of 2023 has been poor, they say. A protracted downturn for dwelling approvals is forecast that extends through 2023 and into 2024. They believe the probability of government intervention to support housing supply is increasing. The figures show approvals for standalone homes fell every month in the past year and are down 17% on this time last year. Units, apartments and townhouse approvals rose 5% in March, but are 11% below the same time last year and at their weakest level since April 21. The value of renovations approved also dropped by 7%. Now, we know that the Labor government's housing policies in Australia have been utterly shocking over the years. They have not got a clue. And now economists are warning that federal government measures to ease cost of living pressures could have the reverse effect and drive up prices. The government has committed to a $14.5 billion cost of living package in the budget, which it hopes will ease inflation. How? Economists fear any subsidies offered will effectively boost disposable income, exactly, and drive up demand and inflation over the medium term. They say that even though the measures would be offered as things like energy subsidies to reduce household bills and not cash payments, It will still, of course, increase household spending. It doesn't really matter the point at which you have saved money. The key point is you've saved money and you then spend it somewhere else. Australia's inflation rate sits at 7% and it is not expected to return to the favoured 2 or 3% until at least mid-2025. Fiscal policy seems to already be too stimulatory. Adding additional net spending just makes that worse, whatever its form is. Government policies that dampen housing supply will simply drive up rents. They need migrants, they need workers, they want the economy to grow, but they will not put the measures in place to increase housing supply. And it doesn't all have to be brand new property, does it? I know they make a lot of money out of it. But they simply need to make it easier for mum and dad investors to look after their own financial future so that the government can spend the money on something else and let them buy property for other people to rent. It's the quickest and most sensible solution. If you install and impose obstacles on investors buying property in a market with increasing demand, you're going to have a housing shortage. This is not the investor's fault. It is not rocket science, people. I will keep you posted on all things property from around Australia as the year progresses. Don't forget to hit the like and subscribe button, and I will see you all again really soon. Bye.